Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 6th of the 9th to Friday the 10th of the 9th, 2021. We've written up the weekly flows to get us underway. We're going to start this as we do the data cycle and the asset classes to save time. So anyway, here we go then. So this is the week Monday the 6th to Friday the 10th, the last trading week. Euro dollar minus 66. So over that week, the euro dollar as an FX pair lost minus 66 points or pips. Euro yen minus 49. Euro pound minus 36. Pound dollar minus 24. Pound yen plus 3. Dollar yen plus 17. Right, if you plug that in, then you get a negative unopposed driver in the euro at minus 151. No backdoor flows, the opposing positive flows mainly going into the dollar at plus 107, into the yen at 29, and the pound was the positive rock at plus 15. Activity plus or minus 151. Right, we'll stop it there and we'll write up the asset classes. Don't go away. Right, welcome back. We've written up the asset classes then. So US dollar index. So it's basically 0.33 from the high. So the dollar's come off, but it's been going up obviously during the week. But overall, it's about a third off its modelled high. Gold is about half marks. So that's where we are there. Oil is 0.45 from the high. So it's 45% from the high. So that's where we are on those. Wall Street has come off 0.38. 38% from our modelled high, S&P 26% from the modelled high, and the tech 14% from the modelled high. So that's the batting order effectively. Wall Street weakest, S&P tech strongest. Right. The US 10-year. This is the price. We're 0.33 from the floor on the price, which means that yields are relatively strong, and the bund is 0.26 from the floor. Arguably, the bund yields, so the European yields, are marginally stronger than the US 10 years. So that's that. Copper has actually broken now, and it's come back a little bit from its break, but it's still above the high. And US steel is 0.42 from the high. So sort of 42% from the high. So we'll stop it there and we'll write up the data cycle and then we'll do the final analysis. Right, welcome back. We've written up the data cycle then. China neutral to soft. The dollar is mixed. Tier 1 is soft. Tier 2 is very strong. Germany neutral to strong. Euro mixed. Tier 1 strong. Tier 2 pretty weak. Yen is neutral to strong. Pound is weak. CAD neutral to pretty strong. AUD is mixed, tier 1 strong, tier 2 pretty weak. New Zealand neutral to weak, and the Swiss is neutral to weak as well. So what have we got then? We've got this strong dollar tier 2 cycle. We've got this strong euro tier 2 cycle. We've got a strong CAD tier 2 cycle, and we've got a weak AUD tier 2 cycle. So that's where we are there. So they're positive and that's negative. Okay, what's going to knock this about next week then? So Monday the 13th, which is the first trading day, is very light data, pretty much non-existent as far as we're concerned. Tuesday the 14th, we got the Reserve Bank of Australia governor's speech by Lowe. GBP unemployment rate and claimant count, and US CPI, so inflation data in the US. Wednesday the 15th, China retail sales, GBP CPI, inflation again, and CAD CPI. So the key takeaway is that running into next week is the GBP complex will be in play. So this will be in play in terms of data. So we'll go from there. And if you just to remind you then, regarding the flows then, so this week we've had the euro, right, so dollar, euro, yen, pound. This week we've had the euro being very soft and negative, unopposed negative driver as for the week as a whole. Intra-week Friday, which was sort of a mid-reading, it was also the unopposed negative driver. So the euro has been very soft, and the bulk of it has been going into the dollar. And last week, just to remind you, we had a soft dollar driving, a strong euro, and a strong pound and a weak yen. So basically the flows have reversed from last week, and so they've had elbow room to do this, and that's where we are. The flows have been suggesting that we've got a floor at some stage in the euro, and that has been suggested throughout the week in terms of intraday, intra-week, and the Asian sessions have been continuously showing this floor in the euro, and yet the market is still been pushing it down. So there's a bit of lag in the system there. Right, so what do we think is going to happen next week? As I said, we've got the GBP. This is in play here with the data. If we should start to see a floor in the euro, so the euro should start to bounce at some stage. So you've got funds going into the euro, neutral to negative on the dollar, and the yen. Well, the yen will be dependent on the equity transmission to a large degree. So you've got funds going into the euro, and then you've got the neutral to negative on the dollar, and we've got a negative data cycle on the pound. The likelihood is we're going to see a fall in the pound. So you've got dollar, euro, yen, pound. So the pound is likely to be going down. The euro is likely to be bouncing. That's likely to be going the other way. And the yen, depending on what the equities are up to. So we've got that's likely to be the driver, and that's going to be the secondary driver probably. So you've got opposing flows there, flows out of there, and so the yen is possibly going to be neutral to positive, suggesting we're going to get equity risk off. So that's where we are. Obviously we'll know a bit more in the Asian session, and take it from there. So hope that was useful. Thank you for watching, and see you Monday for the daily briefing. Goodbye.